Welcome to the Badger Story Slam podcast. Today, this is episode 3 milestone. We've got none other than the original Honey Badger, Spadaboom, with us today. How's it going?
Awesome, man. What's going on? Thanks for having me. I'm excited. Excited the Badger cast is rocking and rolling, but also excited to talk about ibBTC and everything that's going on in Badgerland.
Awesome. In crypto, there's a lot of hyperbole. Every change is like a game changer. But I was reading through this ibBTC stuff, like on our internal channel and what we've been talking about. And especially when I saw the numbers that Poe is suggesting, it really dawned on me like this is a major deal, not just in terms of like what's going to go on with ibBTC as kind of our flagship asset, but also for Badger and like the landscape of Bitcoin in DeFi. So yeah, I think today I just want to get into some of the changes that are going to be happening, and then talk a little bit about like what are the wider implications for that.
Yeah, I love to talk about it, Wasabi, because this is relatively monumental for Badger, I feel. And there's a lot of things that are coming together after an unbelievable roller coaster year, but obviously all focused on the original mission, a mission that we don't waver from, which is bringing Bitcoin to DeFi. And I think with what's coming over the next, few weeks to months, it's going to enable Badger to really be that steward and the dictator of yield in like the entire DeFi ecosystem. And that in itself, is unbelievably powerful because that's exactly how you bring Bitcoin to DeFi. And Badger is the hub for all that, and doing it in a way that's completely community oriented and focused and owned is exactly how it should be. So I couldn't be more fired up.
Awesome. Yeah, I was before we were talking, I was trying to kind of come up with like I don't know, like a tagline or one or two sentence explanation of what's going to be changing. And what I came up with was like two main things. So let me throw this out and tell me if you think it's kind of a good summary. So it seems like before or like in Badger's original vaults that we created, we were sort of looking out and saying, okay, there are all these flavors of tokenized Bitcoin in DeFi, and we're gonna build vaults for a lot of them, for many of them, right? And try to kind of like explore the landscape as it exists and support that where it is. But now we're kind of making a big change to that and saying instead of supporting everything, we're gonna we live in a world where there's kind of constraints on the yield for Bitcoin, and so we're going to basically go all in on our own asset, ibBTC. So it's going from trying to cover the whole landscape to like being really focused and saying this is our main focus. And the second part of that is like there are yields that exist in DeFi for Bitcoin, and uh, you know, kind of Badger 1.0 is like, okay, we're going to go farm those yields for you and return it to the users. It seems like what's happening now is like Badger is taking an active role through Convex and Curve in shaping those yields and trying to accumulate CVX so we can win the curve wars and get the yields for Bitcoin up. So instead of just playing what's the hand we're dealt, it's kind of trying to restructure the whole landscape. So when you put that together, that's a pretty big change.
Yeah, it's a huge change. And it's important, I think, that, we take a step back and understand like Badger 1.0 and Badger 2.0 and like the combination of what's happened and certain decisions that have that have led us to kind of where we are. So like to your point, when Badger first launched, there was really nowhere to earn yield on your Bitcoin, right? Almost at all. Um, people would put it into Curve. Some people would lock that Curve, but the yields were pretty shit, and there was really nothing to do with those LP tokens. You could put some into Yearn, and I think that was really the extent of it. And then Badger comes out, and not only can you earn on those LPs, but then you get a bunch of these Badger rewards that then help you govern like a growing treasury and an exciting narrative and a kind of core focused mission with a vibrant community. And everyone got really excited, and TVL grew substantially. But there was a fundamental thing that was missing there, and the fundamental thing that was missing that Yearn did a good job on in the early days was to gain influence around how that yield moves. And because of the immaturity in the industry as it stands, really most, if not all, of the yield in the entire DeFi ecosystem is coming from Curve. It's wild to think, but it's the reality. And with all that yield coming from Curve, those with influence and obvious massive kudos to Curve and their continued pursuit to creating, taking permissions away from every aspect of that protocol, from pool creation to gauge creation to voting on where the emissions go to all those types of things. Like, you know usually that's a team behind the scenes cutting deals and putting emissions on pools that make sense for the deals that they cut, right, versus make allowing the community and protocols that build on top to decide. So that was a fundamental change that we made in the summer. We said, you know what, we don't want to just, because we were farming and dumping Curve for like 7 months, and we were the largest LPs of Curve. We had like 85% of all of the Bitcoin deposits in Curve at one point. And then it was like, this is dumb. The yield is crap on Bitcoin. It's forcing the DAO to emit more and more rewards just to keep that TVL. 80% of the TVL left because there was new opportunities with, perceived potential upside in the rewards that they're earning that made those capital allocators take their dollars out or their Bitcoin out of Badger. So, that main change is when we decided we were going to be partner first. We kind of tested the waters a bit with sushi. So when we launched the sushi vaults originally, we didn't sell any sushi rewards. Instead, we staked those sushi for X sushi and distribute that to users. And in return, sushi would drive, some emissions to the different pools that we had, which was relatively beneficial, especially for a protocol that didn't have strong underlying yield on its assets. But it was really around Curve, and understanding we can't be doing this anymore. And we were fortunate enough, or I was fortunate enough to speak with the Convex team, before they launched, and having an opportunity to see what type of impact this is going to have. And we made the conscious decision to change all of our strategies, of course, after reviewing Convex's code and spend time with their team and so forth, to deposit our Curve LP tokens into Convex instead of into Curve. And then instead of selling the Curve, we would stake it for in Convex to give them more voting power. And then instead of selling the CVX, we would stake it and then eventually lock it when the locking mechanic came out. So that was the big, that was the big change for us. And that was really as well focused on, like, we have this new asset, ibBTC. It had an okay start, but without Curve liquidity, it's going to be really hard for us to grow that. And ibBTC, if it's underneath the covers just selling Curve, there's no reason for this to be supported by the Curve or Convex communities. So that was another big, focus for us to say, well, we're going to go partner first to build more influence and, more importantly, support the protocols that we work with every day and are integrated with. And then as well, this should hopefully help ibBTC become a more accepted asset because of what it's doing under the covers and inherently supporting these great protocols. So that was the big shift, Wasabi, and coming into where we are now, we built a bunch of unique products, and we're the largest holder of Convex in the world of any protocol, and we have a unique ability to push yield, or adjust where the Curve emissions go every 2 weeks based on our influence, to Bitcoin pools, which didn't happen before, right? Before it was 2%, 3%, 4% of all Curve emissions going to Bitcoin pools, but they had like 30% of the TVL, and they were getting no love. And that's why anyone that integrated them like us had shit underlying yield. So with that influence, now we can focus on making sure Bitcoin gets love, but how many pools can you actually support? Not that many, because of the growing bribe ecosystem, because of the distribution of influence around Curve and Convex, and because how important stablecoins are to the Curve ecosystem. It's very difficult for us to vote on more than one pool, really. And then that's where this all kind of came to be, to your point around like Badger 2.0, where we realized, well, we got to double down. We got to double down on ibBTC if we want this to be successful, to build an enormous amount of liquidity, have better underlying utility, enable large capital allocators to use this pool without large slippage. We need to make this pool huge. And the best way for us to do that is to concentrate our voting power, concentrate our emissions, and really try and enable users of the Badger vaults to consolidate under this one major vault, and help us maintain that level of strong underlying yield on this pool, because every Curve LP token that's in Badger for ibBTC then gets put into Convex so that we can earn more CVX, so we can have more voting power, so we can ensure better underlying yield on that vault. So really anybody in that vault should be depositing into Badger, because that's the best way to get higher underlying yield. So I know that was an enormous amount, but it's a little bit of an overview of how far we've come. A protocol that took advantage of an opportunity in the market where Bitcoin, it was hard to earn yield, really cemented itself with its mission and its focus and its community, and then with this unbelievably fast change in dynamic in DeFi, adjusted accordingly to finally get influence, and now getting ready to put all of its efforts to build the biggest and deepest Bitcoin pool in the entire space.
Awesome. Yeah, yeah, that covers a lot. And I mean, so the TLDR is that basically Badger is going from having, I don't know, 10 or so pools on different versions of Bitcoin to basically going all in on ibBTC. And the other aspect of this that I think you may not have mentioned, although you covered a lot of it, is just the user experience. Because I'm in there in the Discord and talking to people who are trying to move to Badger, especially because we're focused on Bitcoin, and it's you know Bitcoin is just this one monolithic asset, right? And people are used to talking about Bitcoin, or maybe Bitcoin versus ETH or whatever, and then they show up on Badger.com and they see HBTC, OBTC, IBBTC, TBTC, and that it's just kind of overwhelming. So I'm really happy that we're just kind of focusing down on one, and there's going to be kind of associated changes to the user experience that really kind of show and nudge users, if the APY isn't enough to do that, which is the kind of suggested path that we as Badger are taking people down to bring their Bitcoin into DeFi.
Yeah, you're what's up? You're spot on. Like, you know, there's so many things wrong with having a bunch of pools outside of the inability to create strong yield on those pools without just throwing a bunch of Badger rewards at it. It's confusing as heck, and it's unbelievably expensive to move around to optimize like your position. So if you're constantly having to monitor it, if you're constantly having to switch things around and pay crazy gas fees to do it, and it's confusing for new people to come in, like, that's just a big deterrent. That's problematic. At least with this pool, you can feel confident I can hang in here for a while. The yield's not going to go down tremendously after a week. It's gonna continue to have strong supporting underlying yield even at high TVL, because what happens in most instances, not on Badger, just Badger specifically, but in most new pools, the APY is high because the TVL is low. The APY is high because it's based on rewards that are fixed to that pool over a certain period of time.
Mm-hmm.
So if the TVL skyrockets, there's only so many rewards based on the price action of those rewards. The APY is going to get destroyed relatively quickly. You just need one large deposit. So in this instance, users can feel confident at least that we're going to continue voting for it to get as much curve and convex as possible, plus have the boost system, plus take all the emissions from other pools and put it in there to give it a chance to really be large and not be single digit type yield, right? Like I'd love for this pool to have $5 billion by the end of the year. So that's if you look at that specific value proposition for smaller users, there's an equal value proposition for larger depositors. In most instances, it's very difficult for them to want to participate in Badger if they don't hold a lot of Badger, because that's the only way to get, respectable yield on their Bitcoin in Badger today. There also is this huge risk of, if I put $100 million in a pool, what happens if I can't get it out with ridiculous slippage, or, dried up liquidity or things along those lines? Like, folks won't do that. And, a good couple examples are the MIM pool, the Magic Internet Money pool on Curve, and the ST pool on Curve. In my opinion, those pools broke the mold, right? They were able, through very smart and dynamic strategies, build these super pools for two of the largest assets in the space. And MIM did that, with its influence around Curve and Convex, and obviously with the ability to mint MIM using existing interest-bearing stablecoin positions, with their product at Spell, which I thought was, with leverage, which I thought was just genius. And then, with STETH, of course, everything they do with stake and rewards associated with, locking up your ETH while supporting the network, and then, such large backers behind them in the recent treasury diversification. That pool is like 5 point something billion, which is crazy, and there's so few places to earn on ETH anyways in the ecosystem. So, those two pools broke the mold, and I think now there's time. The king is the king of crypto, and Bitcoin's the king, and breaking the mold on those pools is awesome. But Bitcoin's a $1.2 trillion asset, and it needs an unbelievably deep liquidity pool, and I don't see any better place than Curve. So now is that time, and I think it's gonna help the large capital allocators for those specific reasons, be able to move in size, confidence and sustainability in the yield, the ability to build structured products around it. Like, I see a lot of retail facing, crypto lending apps most likely wanted to use this pool as well. Like, we all know, all these, the CeFi players have nowhere to get yield. The premiums on GBTC have dried up. It's an enormous amount of effort to manage, both sides of a lending and borrowing book, and customers and KYC, and there's just a lot of work that goes into it, and, managing a lending desk. So for those types of folks, that their structured product around that is an app that promises a certain yield on Bitcoin, and as long as they can overcome that hurdle and feel confident in how they structure that product, they can use this pool, for their deposit mechanic, and of course the Badger app, subsequently as well. And I see the same for potential large capital allocators like crypto funds. I could imagine them wanting to build, Bitcoin yield offerings, and dedicated, funds for their LPs with certain hurdle rates on Bitcoin yield, and their ability to build confidence in that at scale, based on the liquidity size of this pool, and a deeper understanding of how this pool actually gets yield, and Badger's able to give that yield sustainably and consistently. So that's, I see those as being big changes for, the small fry and the big fry, and then of course all of the aggregators, like the pair of swaps, the 0x's, the matches, they're all going to look for the best trade, and the best trades on like assets are at Curve, and the best trades of like assets on Curves are the deepest liquidity pools, which this will be.
Yeah, I think that makes a lot of sense. Like, so it seems like the biggest or one of the biggest features is just going to be this deep liquidity, which takes us from a world of there's 20 different kinds of Bitcoin, each with not that amazing liquidity, to one pool with what we hope will be the deepest liquidity, and it's also offering this base underlying yield. But I
Best
want to like,
liquidity and best yield, right?
yeah. So I want to like, I don't know, reintroduce ibBTC a little bit, because I know we launched it over the summer, and then kind of like around that time we were like, hey, the Curve stuff came up and Convex stuff came up, and so we realized we needed to do some other steps to you know get the CVX that we needed to like ensure this yield, and so now we're back ready to kind of launch the hell out of it. But like, I think it makes sense to kind of like take a step back and just re-explain how ibBTC works and generates that underlying yield. So can you like go under the hood a little bit and just sketch out how that flow of tokens works to create that base yield?
Sure. So first and foremost, interest-bearing Bitcoin. It's the flagship product for Badger. It's what we believe to be the North Star, because we look at it as the on-ramp for millions of people with Bitcoin that want to earn interest in one click in seconds. Those people are not going to want to learn how to use these complicated apps with all these different, browser extensions and key management and all this type of stuff. They're literally going to just want to, on the platforms that they're used to and comfortable with, click a button, and now they're earning interest on it, and they can verify, the transparency of the ability to earn interest. They want to be able to deposit and withdraw whenever they want, and they want to feel confident, like just a baseline, 3, 4, 5%, nothing crazy. Um, so that's really, what we want interest bearing Bitcoin to become. And I believe one day every decentralized and centralized platform in the world that has crypto there will have interest bearing Bitcoin as an option for them to swap into or click to just get into. And I think that's when ibBTC explodes and becomes that true on ramp. But let's talk about how it works. So, interest bearing Bitcoin is backed 1 to 1 by Bitcoin that's deposited in our vaults. So, what does that mean? Our vaults are just smart contracts, open source smart contracts that anybody can verify and review. Those smart contracts have different automated strategies, meaning they take whatever deposit assets put into them and they do things with them to generate some level of return. On our curve vaults, which make up the majority of the assets behind interest-bearing Bitcoin and also the majority of the capital that's deposited in the most used strategies in our system. We'll take those um, Bitcoin positions, we'll LP them on curve, and then we'll do things with the curve and subsequent convex rewards to help users not have to spend gas, do a bunch of work, and then just get more yield out of their position. So that's what those strategies do. And there's no permanent loss on those strategies because they're single sided Bitcoin deposits. So ibBTC is backed 1 to 1 by any Bitcoin that's deposited in our vault. So it's redeemable at any time, and you can verify on chain the Bitcoin that's backing interest bearing Bitcoin. So it's not a black box whatsoever. That's one of the biggest pain points that we are trying to solve. Is in the non-decentralized world, everything's a black box. And specifically in the crypto world, from exchanges to um, lending and borrowing and a whole variety of other crypto service providers, you have no clue what the heck's happening when you press deposit or hand over your asset. That shouldn't be the case. And with ibBTC, by looking at the smart contracts, by verifying on chain, you can see exactly what's happening with that Bitcoin. You can see exactly how those strategies are putting it to work. You can see exactly how much Bitcoin is backing it. So that's what interest bearing Bitcoin is. So how does that actually create the interest? Well, those strategies are earning interest. So you put the Bitcoin into the vaults, and that Bitcoin is now earning interest. The average of the interest earned on those different vault tokens that are backing interest bearing Bitcoin are what the underlying interest of interest bearing Bitcoin actually is. So, for example, if there's three vault tokens that are backing it and they're each earning, one's earning 2%, one's earning 1%, and the other one's earning 4%, they're probably on average going to be, 2.75% interest if you combine like the basket, and that's would be the underlying interest of ibBTC. So you can almost look at it as like an index of different interest bearing Bitcoin positions, a basket of interest bearing Bitcoin positions that make up the underlying. So that's really what it is. I'll stop there. I'm sure a couple things you'd want to add to that.
Yeah, I mean, I think just from the user's point of view, I think it's important to clarify how that interest is paid out and accrues to the token, because it's like you said, it's backed by these DeFi activities, either providing liquidity or other things that are going on kind of under the hood to generate this interest. but it's not like accruing to your account when you're looking at your balance or anything, right? It's like accrued in the form of say Bitcoin is at 100K, God willing, and you got buy one ibBTC, then later, a year later, say that there was like a 3% yield, then later that's a year later that's going to be 103,000, right? Because there's this delta that the what's under the hood there has created additional assets backing that one ibBTC. Is that a good way to explain it?
Yeah, most certainly. And I think for users that use ibBTC, the ability to earn in Bitcoin on Bitcoin is really what they're looking for there, and which is different from some of our other products like the vaults in particular. You primarily earn curve and convex tokens, although optimized. It's not Bitcoin. You'd have to do things with those to earn in Bitcoin. I mean, to see those returns realized in Bitcoin. With ibBTC, it's all Bitcoin. Obviously, much more conservative of yield, 3 to 5%, but still, it's in Bitcoin. So I think it speaks to a different type of user. And there's still quite a bit of work, Wasabi, right? Before we can, confidently say at scale with billions and billions of dollars of ibBTC in circulation that it can maintain, a strong underlying yield, right? This is a very difficult task in front of us because no one's ever done it before. But in a truly decentralized way, being able to create inherent yield on Bitcoin at scale, that's not easy. So we got a lot of work ahead of us. There's been a couple bits that we've put to the forefront that we think will help, that have been approved by the community, that is being worked on by the development team, that will help increase the potential underlying yield and just restructure how that yield is actually generated for ibBTC. And like the TLDR of that is, instead of just using the tokens that are underlying ibBTC, looking at the entire vault system and all the fees that are generated there, and restructuring what we do with the fees and which portion, how much of that portion sold for Bitcoin, where is that then injected, how much percent of it's put into ibBTC. So it makes the whole system work together. Like where if TVL grows in the Badger vaults, the wherewithal to support ibBTC at a higher market cap to have a stronger underlying yield increases as well, versus relying on a few different vaults that, if those don't grow but the whole system grows, then you're kind of screwed, right? ibBTC is going to have trouble getting yield. So restructuring it so it's one system versus almost two separate systems, or a system within a system.
Yeah, so this goes back to like the second prong of what we were talking about, right? So we launched ibBTC in the summer, and the underlying yield was not what we wanted to be. So then we had to kind of change our focus to the convex curve wars. Like you said, there's challenges. We got to fight a whole damn war to get the yields where we need to be, right? So like, what can you, I mean, we've done a couple episodes on the curve and convex stuff, so like we don't need to get super into it, but can you just make that connection between what we're doing? Like imagine a user comes to Badger and they see, these convex and curve sets at the top of the page, and they, have no idea what the connection is to either, the Bitcoin mission or this ibBTC thing. So like how important is the convex stuff to generating that underlying yield?
It's the foundation of it all. In the end of the day, curve is the backbone of yield in the entire DeFi industry. Convex now is the largest holder of locked curve in the world by a mile. So what that means is, as I mentioned earlier, because of the permissionless nature of curve, every 2 weeks they have a vote, and they say anyone that has locked curve can vote to decide where our fixed curve emissions, which make up the yield that is curve's influence, right? Like, that's another important thing to delineate between. Like when we say it's the backbone of yield, it's because there's $20 billion deposited in curve, almost all single-sided deposit with no impermanent loss risk, and those deposits earn curve rewards. So that is yield. Now, obviously, there's a lot of people that suggest, well, what happens when the price of those underlying assets go down? What happens if there's a bear market? Like, fact of the matter is that's that's part of it all. The yields will go down, as we've seen, a few times with larger market corrections in shorter time frames over the last year and a half. But neither here nor there. One of the largest pools of liquidity to earn yield is on curve. So convex, because they have so much locked curve, um, they then introduce the ability to vote on how they decide what pools get the most curve awards every 2 weeks to holders of their locked token. So you have a protocol with 50% vote weight, and most of the time the other 50% doesn't show up. The entire 50% doesn't show up for the emissions votes on curve. So you have a pretty significant vote weight that goes to convex. Convex, that says only our locked convex holders get to determine which pools get which rewards. So in turn, those that hold convex really have a strong influence on where the curve rewards go each week. And that's how this whole thing ties together. So when you talk about the curve wars are initially, who can lock up the most curve and have the biggest influence. Many would argue that convex is kind of just dominated that war. And then subsequently, partners like us, like Frax, like Spell, like Mstable, like Alchemix, we understood that it's much harder for us to um, get as much locked curve into our control. One, because the protocols weren't whitelisted to do so, which is a whole other conversation that's ongoing in a curve. But also, they didn't. There was really no way to um, better do that than to control the controller of those rewards. Not control, but have an influence is what I mean. So a lot of protocols started going forward and acquiring convex and building strategies around it to be able to have influence. Apps like Vodium came out, bribing became a thing, all that type of stuff. I'm really proud of how the Badger team, in particular, and the Badger community, saw that opportunity, but looked past some of the short term um, and, in our opinion, unsustainable uh, things like bribing, and look towards, like, how do you build a flywheel, right? Like, how do you build something that perpetually grows without having to keep pushing more and more and more and more money at it, money that just is kind of just comes and goes, like it only lasts a couple weeks. And that's where we built the vote locked convex vault, where essentially, user deposits convex, we lock it um, in the convex locker contract. It's now in locked convex, and with that, Badger then has the voting influence to be able to dictate where that yield should go for that vote locked convex. But the nature of the vault is partially redeemable, so users don't have to wait the 16 weeks that convex requires you to wait when you lock with them. So it's partially redeemable at times. And then as well, we have a very liquid, I think it's 10 or $11 million liquid curve pool for vote locked convex. So if users don't want to wait at all, they have the off ramp there to be able to get out. But the flywheel really is the fact that every dollar, every Bitcoin LP, Curve LP that's deposited into Badger, we deposit into Convex. We then take that CVX. With recent strategy changes and governance proposals, we are now locking all that CVX. When we lock that CVX in the locker, we now have a stronger influence on dictating where the yield should go, growing every day. I think the stat that we saw today, we're locking 22,000 convex a day
Mm.
on average since we launched that vault. And that's with, I'd say, about $500 or $600 million worth of Bitcoin LPs deposited into convex. So if we're able to grow the capital in the TVL of BTC Curve LPs that were deposited into convex, we're going to be locking more and more convex every day through these strategies, and also subsequently ensuring that our liquid locked convex curve pool maintains peg and gives that off ramp because that CVX we're going to be using to buy locked convex in that pool to keep the peg higher, and then that enables really the BVE CVX, the locked Badger Vault convex, to be the best convex to own, because you can get out whenever you want. You obviously earn the best yield, and why they earn the best yield. Not only is you getting what you're getting from convex because there's no fees on the vault, but we're also taking any of the CVX curve that's earned through the 500 million in Bitcoin deposits and redirecting those to vote locked convex holders. So you're getting even more curve, which obviously those types of depositors really want, and you're getting better yield on your Bitcoin, which you probably have deposited in the Badger vaults as well. So it really ties everything together. And in our opinion, that's a very, very, very sustainable strategy. And this is what gets me crazy fired up. It's like, with ibBTC, if we're able to hit that $5 billion threshold that I mentioned earlier, Wasabi, we're gonna be locking like 10x the amount of convex a day.
Mm.
We're gonna have really strong influence around the ibBTC yield, which is great, and what you need to have if it's going to be a $5 billion pool, because how else are you going to ensure sustainable yield? So this all works together. It's a pretty unique flywheel. I think it's very different from some of the other strategies. I think it's the winning strategy. It's how you win the war, I think. But winning the war is also about supporting everyone else, right? Like, one of the reasons we're even able to do this is because of how hard we work to understand and align with Curve and Convex around which strategies can best help your protocols. Like, what are those strategies? And we developed it with them. We didn't just come up with it in a box and say, hey, here it is, like it or not. It's like, no, these are open conversations, understanding and talking with their communities and determining what makes the most sense. And like, we take the curve we earn, we lock it into CVX, so CVX gets more and more, or we lock it into convex, so they get more and more um, voting power around VE curve. We don't sell their CVX, we lock it, which obviously removes supply from the circulating, or removes from the market circulating supply, and also helps show value to why you should be governing and holding convex and locking it for longer periods of time, because the benefits that come from it. And then of course, like, we're putting a boatload of TVL into curve and convex, that really just helps those protocols grow. So it's not about us, it's about the whole ecosystem, and that ecosystem flourishing and doing things together as protocols that benefit one another, benefit the users, benefit the communities, and allow it to be somewhat sustainable.
So putting it together, the case for ibBTC, you have number one, this curve pool is going to be, we hope, the deepest liquidity, so it's going to be super easy to get in and out of in size for big holders, and it has this interest going on under the hood, which is mainly curve LP strategies, and we're ensuring that those are going to do well, they're going to perform well, because we have this convex vote power that's only going to increase as the pool size increases. But I wanted to point out kind of one more feature about ibBTC. Like, people talk about like DeFi 2.0, and a feature of that is the rise of these interest bearing collaterals. And the thing about Bitcoin is, I think Suzu said it, but like Bitcoin is kind of like the ultimate collateral, right? Like, there's this base protocol that you can kind of be confident, okay, 5 years, 10 years from now, this is going to be valuable or massively more valuable. So now we're taking that and building in an even more interest bearing, building in this interest bearing feature to it to make it an even better collateral. So like you've seen on stuff like Abracadabra, now we're not just using regular collateral, we're using like your involved USDC, or we're using X sushi, the productive asset of collateral. So how do you see ibBTC kind of like being in the same category as like an X sushi or like a Yearn Vault USDC, in terms of like this kind of like no brainer, better form of collateral than the base asset?
Yeah, that's the hope, right, Wasabi? But for that to become a reality, it needs to be a multi-chain asset. It needs to have enormous amounts of liquidity, and it needs to have a variety of different options for utility, right? Like you can have an interest bearing asset, but if it doesn't have those three things, that it's kind of just a shittier WBTC or REMBTC or whatever. Just because you can do less with it, yeah, you can hold it and earn a little bit of interest, but those assets have the ability to be deposited in places like Badger to earn interest. So yeah, you can't just hold it, but if there's nothing to do with it, it doesn't matter. So that's why stuff like what we're talking about with Curve is so important, because you got to take these in stages and get it to certain places where it can then open up those other sides of the equation, right? Like if we're able to increase the market cap of ibBTC through this curve pool and through the desire for yield and through the desire for um, low slippage, like-minded or like asset Bitcoin trades, that in itself is going to make it like a top 50 cryptocurrency. And that in itself will then open up opportunities for you know other decentralized protocols to want to use it in their lending and borrowing markets, for centralized platforms like exchanges to open up BTC ibBTC markets, for all these other cross-chain protocols that are trying to attract more capital into their system to leverage ibBTC, uh, versus maybe some other Bitcoin assets that exist, because of the fact that it's as liquid, it has as much utility, but it also is interest bearing, and like that's what it needs to be, right? Because if it's missing the first two, it doesn't seem as attractive to some of the other groups that I'm talking about, or the other um, kind of parts of the equation. So that's how I see it, and then that's why this is such an important time. It's really that like acceleration. We've seen it with MIM. Like MIM now, I think has 2.5 or $3 billion in circulation. It's like a top five or six, I think, stable coin by market cap. And Bitfinex just turned it on for base pairs. A variety of other protocols are starting to integrate it on a variety of different chains, and then that in itself is helping with growth and helping push things forward.
Awesome. So here's the fun part. I've got some kind of like objections. Like, okay, let me back up. So like one of the things I think is interesting about you is like you're also, you're, DeFi, but you're also kind of like a Bitcoin OG, right? Like you were in Bitcoin very early and part of that community, and you kind of get inside the heads of different sort of parts of the Bitcoin tribe. So let me hit you with kind of like a couple, I don't know, objections or like points of view that, like, imagine some kind like BTC Maxi like forgot to take their pills and are listening to this DeFi podcast somehow, and would say this to you. So just want to get your take on like a few different kind of like cases of what someone would say. So like say you're talking with someone who's kind of like a BTC Maxi, and Bitcoin is amazing and perfect, created by God, fully complete, no need to change it, no need for any of this DeFi shit. What would you say to them? Like, what's the case for them to take a look at DeFi on Ethereum, and how Bitcoin can and should fit into that?
What I would say to them is like, do you want to just sit on it and uh, see price appreciation over a longer time frame, or during that time while you intend to sit on it anyways, do you want to put it to work and get some utility out of it? Now, a lot of Bitcoin purists will say, well, you know, you're wrapping it, there's custodial risks associated with it, there's all these different smart contracts and layers of smart contracts that bring even more risk. And that's true, right? Like, if you're not comfortable with those layers of risk, then maybe it doesn't make sense now. But I think with time, more and more people are going to become comfortable. And I think in time, the Bitcoin purists that like not your keys, not your crypto, like those folks are going to be such a small minority of the total holders of Bitcoin in the world, a ridiculously small minority. And the majority are going to care less about decentralization and owning their keys. Are going to look for simplicity, um, user experience, and like the inherent benefits and value add of whatever asset they're holding. Not saying totally love that, but I think it's just the reality of what it is. And with that reality, the trade-offs in it, that there's a level of custodianship in wrapped Bitcoin today, which I hope Badger helps progress much further in the future. There's inherently no utility for Bitcoin on the Bitcoin network. So I believe like Bitcoin, there's going to be a large percentage of the Bitcoin supply that's living off of the network, and I don't think that's a bad thing, right? The more utility Bitcoin can have, especially in trying to create and shape a new financial system, and that financial system being DeFi, is built completely on peer-to-peer transactions and transparency at a smart contract level. What's wrong with that? Those are very similar ethos. And I think, if you get over that hump, that initial hump, at least today, and I don't think a lot of Bitcoin maximalists are going to be using DeFi anytime soon. But again, I still think they're a minority. They're probably just the loudest today. You can even look at people that have assets on exchanges, people that have assets in CeFi, or like centralized lending providers, like billions and billions and billions and billions of dollars are sitting in these places with no transparency whatsoever, zero. At least in the Ethereum ecosystem and in open source software, and a lot of these smart contracts, of course, badgers are all that way, but some of the porcos aren't. So I'm not going to speak for everybody, but um, in our world, you can see exactly what's happening by the second, verify it yourself, and understand, what your risk appetite is, and allocate accordingly. So I think over time it's going to get much much better. The tech's going to evolve. There's going to be many more people with Bitcoin that want to get utility out of it. I think there's going to be a lot of people that have held Bitcoin for a long time that could kind of tired of not getting utility, and kind of shift and change from being more on one side than the other. And I think that's what's going to lend itself to a lot of the Bitcoin supply living off of the Bitcoin network.
Got it. Yeah, I mean, I think another angle to address that too is just like, having different buckets of your Bitcoin, like just the same way like you hear financial advisors are now saying like, actually, like you should take a small percentage and put it in Bitcoin or ETH or whatever. Just, like they're starting to kind of come on board and say that. And I think it makes sense for someone thinking about their Bitcoin portfolio to just experiment with a small percentage of it and use it in DeFi, just if anything, to just kind of keep abreast of what's going on and the changes that are happening. But let me ask you this. So, like, another kind of like related argument is the um, DeFi needs to happen on the Bitcoin blockchain, and like there's going to be technological changes to Bitcoin coming soon, with maybe with this Taproot upgrade or other stuff that's coming down the road that can or should be happening. And the proper place for Bitcoin DeFi is on the Bitcoin blockchain. Like, do you think that holds any water?
Yeah, I think it's going to happen. I just don't think it's going to happen anytime soon at scale, right? Like, um, today, with so much developer focus on Ethereum and some of the other ecosystems that are growing, the tooling that enables anybody and everybody to integrate and leverage um, the applications that are built, and the ability to use the infrastructure that has been hardened over the last 5 or 6 years, is just so far ahead, and it's built for this use case where the Bitcoin network is not. And I think there's going to be innovations that enable that network to be better utilized, but I don't think that's going to happen for a while. And because of that, I think it's just going to growingly explode outside of that network in terms of utility and how Bitcoin's being put to work in other applications. But I am optimistic that on the Bitcoin network there are solutions. We're starting to see Lightning channels grow exponentially, which is fantastic, and a couple other solutions being built by folks like Giacomo Zucco and others. So I'm optimistic that we're going to be able to see some of that built on there. I just don't think it's going to be anytime soon, and the majority of the focus for both users, developers, applications, integrations is going to be around the Ethereum ecosystem and potentially some of the side chains associated with it.
Got it. Okay, final kind of use case. Say someone who has some Bitcoin on like a BlockFi or a Celsius, and maybe they're, they read about these DeFi hacks that happen from time to time and are just kind of scared, and they're saying, okay, if ibBTC is going to be 3, 4, 5%, that's kind of what I'm getting on these centralized custody platforms. So what's the argument that you would make to them? Why should they figure out a wallet and MetaMask and try out DeFi?
Well, there are a lot of inherent risks. I don't want to just jump over that. There are a lot of inherent risks. There's a lot of people losing funds. I think you got to take responsibility for doing the appropriate research and not chasing the next buck, and feeling confident in the applications that you're putting that protocol or putting your assets to work in, and also getting potential other levels of protection, being it either decentralized or centralized insurance for your deposits, because with all the smart contracts that are being built on top of each other, each layer is a new level of risk. At the same time, you know, every day this gets less and less risky. What I mean by that is, obviously, if you're looking at the protocol that launched last week that has, a landing page and, 5 posts on Twitter, the risk is enormous. I don't give a crap, what the situation is. But now I think there's 100 billion, 125 billion dollars inside of DeFi, and that's in majority in protocols that have been operating in smart contracts that have been operating and in production for a year, 2 years, 3 years, 4 years in certain instances. Um, if you look at the maker ecosystem and so forth, so like that's where you want to feel confident. You want to, if anybody were to start, I would start with the most trusted and reputable protocols. You can see which ones those are, because those are usually the ones with the most capital. Places like DeFi Pulse or DeFi Llama, you can sort by TVL and see which apps and protocols have the most capital inside of them, and then look at how long they've been around. Look at what other insurance options you can stack on top of those. Like, if the insurance providers are not comfortable insuring these protocols, I don't know how much of a good idea it is for newbies to put capital into those protocols. So just starting slow, and being able to just use apps. Like, I remember when I first started using uh, DeFi, it must have been beginning of 2020, in that range. Uniswap before that. So I guess middle of 2019. Um, it was it was just mind blowing, right? You go to different apps. It recognizes how much capital you have. It helps you understand where you can deposit. You don't need to give your name and your phone number and your right testicle. You just They don't give a crap who you are, as long as you have the assets and you follow the requirements of whatever has been coded in the specific action you're trying to take on that app. It then pairs you with someone else on the other side that's willing to take the other side of the trade, or whatever it is. If it's a borrowing, lending, if it's a decentralized exchange trade, if it's whatever it may be. It is just crazy when you're used to like going to a bank and having to wire money and paying a arm and a leg and having to wait a week. And it's just like and they have so many questions for you, and it's just crazy. So it really helps you understand what the future of the web and the future of value exchange is going to look like, no matter if you're in the United States and Pakistan and Singapore and Toronto and Africa. Like, it doesn't matter. That This is how value is going to be exchanged. It's going to be a completely uh, digital rail system, um, built on the trust in the code, and more importantly, immutable code that's sitting underneath it. And it's going to open up a whole new world of a P2P transaction. So I'm really excited for it. But people need to understand, the risks that come, and they need to be diligent around those risks, and they need to just start small and start slow. and start with the most reputable and longest standing players in the space.
All right. So we've talked about what's going on with ibBTC. We've talked about why someone would want to get into it. What are the potential risks and objections someone might have? So let's uh, let's talk about the launch. So November 18th, tattooed on my arm here. What's happening on November 18th? What kind of changes can users expect to see when they hit the Badger app?
What the most important thing, and this is a huge change for us, right? And I'm really happy that this is happening. We want everyone to be able to, as seamlessly as possible, deposit into the ibBTC vault to get the best yield on their Bitcoin. And that can be broken down to a variety of different kind of users. But for the most part, it's all going to be doable inside of the Badger app, which is very different from what it was before, where we had users had to go over here, go get this token, come over here, do that, come over here, and then eventually make their way back. So if you look at existing vault depositors, so people, there's I think 1.2 billion of Bitcoin deposits in the vaults. Majority of those vaults, if you're already in there, so you're already a Badger user, you're already earning yield, um, you're gonna obviously based on governance proposals and approvals for different emission schedules. If those go through, you're gonna see the yield on your existing vaults go down tremendously, because there won't be any more Badger rewards, and there's obviously no vote weight on those pools, so the underlying yield is relatively weak. But for that user, they can simply click mint and mint ibBTC, and it's free. There's no minting costs. And now they have ibBTC. They go to the set page, and you'll see the ibBTC Curve LP vault, the new vault, and you press deposit. And it's as simple as that. You don't need to go LP yourself on Curve and then come back. You don't need to unwind your position, go to Curve, switch pools, deposit different assets. You literally just got to click mint. It's free, deposit, and that's it. And we do all the rest for you. So that's one user and one use case. If you're a user that's not in the Badger vaults today, but hold WBTC or RMBTC, all you got to do is come with either of those assets, go to the ibBTC Curve LP vault or the set, and click deposit. And we do the rest for you. We mint ibBTC, we LP it for you, and we deposit that LP token back in our vault. So literally, you just come with those assets and click deposit. As simple as that. And then subsequently, of course, if you're on Curve and you have Bitcoin, if you're on Curve and not in Badger, as an example, or you're on Convex and not in Badger, you could change your Curve LP position through those protocols by going back to Curve, withdrawing your assets from that pool and depositing it into the ibBTC Curve pool, and then taking that LP token and coming to Badger and depositing in our new vault. And then, of course, those vaults are going to get all the emissions from the other sets and vaults that used to have emissions, coupled with obviously Curve and CVX rewards. And I think because the pool is going to be growing in TVL, it's going to start at nothing. The rewards are going to be pretty juicy because we're going to be putting such a strong vote weight on it with our convex position. So that's really the state of the union and what users should expect on November 18th. Um, of course, that means there's a new ibBTC Curve LP vault. I think that's a given, but that's going to happen then as well. But also, like, the withdrawal fees are going to be all down to 0.1 by that time. As I mentioned, mint fees on ibBTC are going to be zero, and there's going to be the ability to mint with any of the single-sided Curve LP vaults, most likely outside of PBTC and OBTC for now. And yeah, that's really it. And I think either that week or the week after, we're going to have the ability to go from native Bitcoin right into that vault. So users come with their native Bitcoin through the bridge with one click, go right into the new ibBTC Curve vault and be earning the best yield in DeFi.
Awesome. So I am really getting behind these zaps. I think we should have done this, for all of the vaults. Just like the ability to automate multiple transactions into one transaction for users is huge time savings, huge learning. It's like fewer stuff that the user has to learn, and just a lot easier to kind of show, hey, like this is what we need you to do, and in fact, we're going to do it for you.
Me too. It's a game changer. It just makes it so much easier. And like what's also really important for Badger is that the ibBTC supply grows, right? We talked about the importance of liquidity for utility, and if we launched this pool and we didn't make it easier for users to mint ibBTC, that pool probably would end up being much more WBTC or REMBTC or SBTC than it is ibBTC. And that's great and all because we're going to bring that pool back and it's still going to be our big focus. But if that pool was more ibBTC than those assets and it's a multi-billion-dollar pool, well then ibBTC is a top 50 cryptocurrency in the world and has reached that explosive growth acceleration that helps make it that much more attractive for integrating into their platform, either centralized or decentralized. So the zaps are absolutely critical for that.
Yeah, and I don't know, maybe we can give listeners a an idea. Like there's no better source of alpha in DeFi than just like reading discords and what people are saying openly, right? So like there's this Discord channel that in the main Badger Discord, the request for feedback on the ibBTC emissions. So this is where Poe, one of the econ team members, has basically laid out, look, here's the amount of Badger that we're proposing to incentivize on this vault. And just if anyone reading that, go take a look at those numbers, and they're pretty eye popping and give you kind of an idea of how all in Badger is going on ibBTC. So like, do you want to, I don't know, give people a flavor of what those numbers look like, or what the yields on that pool might be at different TVL levels?
Well, I'm going to refrain from speaking to yield numbers because I've gotten in trouble in the past for doing this. So I'm not I'm not going to do that. But if I'm not mistaken, it's 39,000 Badger for 1 week. That in itself, I think annualizes at like 75 million. So if you were to just kind of scope that out, at 75 million in TVL, that's 100% APY just in Badger. That doesn't include the boost. But subsequently, like the curve and convex emissions are going to be as high, if not higher, because of the vote weight that we're going to put forward. So the goal in the first week is to crack a billion. And I feel relatively confident. Over a billion, we're going to have a double digit APR. And then that then will ignite the flywheel to get more and more convex. So every 2 weeks, we're going to be able to put more and more curve towards those pools. And then, of course, kicking in the boost system for those that that have Badger. I think that's another important thing that I think was overlooked. To your point, Wasabi, there's an enormous amount of alpha in those RFF channels and across the Discord. What's being talked about is having a percentage of the emissions being flat. What that means is the bottom end of the yield. Like if there's a range of yield from 10 to 40%, that bottom end would grow maybe to 20%, because you don't need to hold Badger to get some more yield in Badger tokens. So that's like it's the boost is still going to be there. You'll still get the most yield if you have Badger, but a portion of that will be flat, so it'll go to any depositor. And the reason that was proposed was because it then makes Badger, a no-brainer deposit venue for those Curve LPs versus maybe going to other protocols that offer yield on depositing the ibBTC Curve LP. It'll by far be the best place for yield, the easiest to get into, and then subsequently, if you have Badger or Dig, the best place to get even more yield out of it, and most likely continue to see that yield hopefully grow with TVL in tandem because of the influence growing at the same time.
And I mean, the other thing, like I've thought about this a lot as a Badger user, right? Like with Ethereum fees the way they are, like what I'm trying to minimize when I'm picking like what pools in Badger or other places in DeFi is just like, okay, what are they? Is the protocol really kind of committing and investing in, right? So like the last thing you want, especially now when like gas is whatever it is all the time, you don't want to ape into something and then just have to withdraw in like a couple months when it goes down, right? Like at least for me personally, like that's not my style. I like to look for things that are kind of long term in nature. So um, I guess the trade off, like I could see some people saying, all right, I just put my money in here. Why are you making me move to ibBTC? I hope we've kind of laid out the case of why this is such a strategic move and why it's like we're doing everything we can to make it kind of financially appealing and also easy, and also aligning in a strategy that Badger can support long term, right? It's not just like a something that's gonna go away. So I don't know. I think putting it all together, we've covered a lot of stuff about like the implications for users, people who are in different vaults. They'll be able to move. Small Bitcoin holders will be getting a yield. Big institutional Bitcoin holders will be able to move into this vault and out of it in size. So maybe we could just close like how do you see this impacting a like the Badger DAO, Badger token holders, Badger as an organization, and then B, how do you see this impacting kind of like Bitcoin in general, like on the full scale of Bitcoin, like not just in DeFi, but like the overall market?
I'd say to answer your first question, I think it's a massive step forward for Badger. I think Badger is now the steward of yield in DeFi for Bitcoin, which is obviously a core component of being the hub of Bitcoin in the DeFi ecosystem and aligning specifically with our mission of bringing Bitcoin to DeFi. We now have the side of the equation that actually attracts that Bitcoin like a magnet, and then the apps and tools that enable them to bring it and start participating very easily. I think it's going to change almost every major aspect. I think our TVL is going to grow exponentially. um, like I said, that pool is 5 billion. If we can capture that inside of the Badger app, coupled with the existing deposit, I think you'll see an explosion there. We're finally going to have an opportunity to earn strong revenue and performance fees and not have to rely on withdrawal fees. A lot of people have scrutinized Badger on their withdrawal fees. At the same time, yield was so bad on Bitcoin through Curve, and that was the majority of our deposits. Without the withdrawal fees, Badger wouldn't be making, the DAO wouldn't be making, and the treasury wouldn't be making any revenue. I don't know what the number is today, but I think it's close to like 30 or 35 million that's been generated in the last year, or 10 months or so. Now, if there's a pool with 5 billion earning 10% interest at 500 million, in interest, Badger is going to be able to capture a 20% performance fee on that, right? Which totally is going to blow our revenue out of the water. We're going to see, a 4 or 5x in our revenue subsequently, like we are with the TVL. But most importantly, Wasabi, like it's not a flash in the pan, right? It's sustainable. We see protocols like Yearn and even Spell generating enormous revenue. uh, it's because stable coins have like 20, 30, 40% yield. If you have a performance fee or any type of fee whatsoever on something that generates yield like that at scale in the billions of dollars, guess what? You're going to make a crap load of revenue for that protocol. Bitcoin's been the total opposite, but now we're finally going to get our chance to do that and have influence around that to ensure that it doesn't just go away. So I think it's going to change everything. And then I think as Badger develops more and more and more of a foothold around Curve influence and the ability to dictate that yield because of this flywheel and because of all the convex is going to be locked, I think Badger token holders are going to have a very strong say on where that's not. I don't think I know they're going to have a very strong say around where that yield is distributed. So inherently, like Badger becomes a meta token for dictating not only where the Bitcoin yield goes, but also where, if it becomes one of the largest holders, like where yield goes in general in Curve. And we've kind of seen what's happened with, some of the landscape when there's a higher percentage of influence in certain protocols. Like I think that will really um, interest different types of protocols and holders to start participating in the BadgerDAO ecosystem, which is exciting. So I think it's a massive push forward. It moves us that much closer to our North Star of, around enabling people to earn interest on their Bitcoin in seconds with one click in ibBTC. And obviously, I'm super excited for it. And I think the other question of like how does this change the dynamic for Bitcoin? I think it's just going to be that slap in the face, continuous slap in the face, and just like that nagging reminder, like you can do something with your Bitcoin and earn really good yield without going to a black box and depositing it and not knowing what the hell is happening with it with a relatively new startup or whatever. And I think it's just gonna, again, it's just gonna be that magnet. And I think this is gonna be one of the biggest catalysts for Bitcoin leaving the Bitcoin network that we've ever seen. And of course you know that's directly in line with being able to bring Bitcoin to DeFi and the mission that Badger's all about.
All right. So last question for you. It's kind of like customary on podcasts. You say like, where do you go to follow you on Twitter or whatever? And like, I think people can find you on Twitter. I think they can find the Badger website. I think they can find the Badger app. But like DeFi, the reason that I'm here, like as a contributor at Badger and not just a user or listening to stuff, is because I showed up in the Discord and started asking questions and poking around and talking to people. And pretty damn soon you end up getting roped into contributing and helping build this stuff. So if someone is listening to this and wants to not just learn more, but to actually get involved and build and do feedback and get involved in these discussions and help shape the future, what's the best place to go? Like, is there a certain channel in the Discord that touches on these things, or where should people go if they want to contribute?
um so obviously the Discord, I'm so proud of that Discord, not as an individual, just as like a contributor and community member, because the people in there care so much, and we're all in it trying to make this thing great together, and you get those vibes immediately. So joining the Discord will give you a really great sense of the different type of community contributors and just people in general that are there and believe in this overall mission. But to your point earlier as well, it's a great way to really understand what's going on. It's a little overwhelming at times. There's a start here section. I would probably go there, just understand like where all the different resources are around Badger, from the wiki to the website to the YouTube channel to the podcast to the blog to all these different places, and just start reading some of the recent stuff. The announcement channel in Discord is really great as well. And then just coming and saying hello and asking questions very, very, very openly. Ask questions in the general chat. Never think a question's dumb. And you'll see Badgers out of the woodworks start answering and trying their best to help as much as humanly possible, because that's what it's about, right? So the Discord's by far the best place to go to get involved in the community. I think the community is 15,000 people strong there now, and yeah, would love to have you. And I think what's unique as well. I think it's something to be said for those that are looking to work more in Web3 and work more in DAO ecosystems and with protocols. Everyone at Badger, I think there's close to 30 people that work, with as contributors to the DAO on a full time basis now, something like that, 25 or whatever. Every single person's come from the community. There's never been a job posting. There's none of that type of stuff. It's just individuals that care enough to learn on their own accord and want to show that level of ambition to contribute in some form or fashion, and very often with a level of enthusiasm and an open mind that usually turns into either a part-time or full-time contribution to the DAO.
Yeah, I mean, just to add on to that, it's like I'm sure people may have heard about like discords or being important, blah blah blah. But like, just to give you an idea, like the level of granularity of discussion that's in there, right? Like, there's a channel about how much Badger is being emitted to incentivize a set. If you think it's too low, you can do a feedback there and get in the discussion. If you think it's too high, you should get in there and talk. You can talk about the fees on different aspects of the product. You can talk about our voting strategy in Convex and whether we should be voting on this or that pool, right? So it's like not just kind of like a place to get your questions answered, but it's like a place to co-create with the Badger team. So I think that's what's so powerful about it, and why I'm so excited to see how this launch goes on the 18th. So let's do this.
Yeah, man, I couldn't be more excited about it. It's going to be a lot of fun. I think it's going to be a monumental point, kind of in Badger's history and roadmap. And I'm excited to get all the feedback from users, and make changes, and together figure out what's the direction that this product and this pool and the usability of the app should take from this point. But I really appreciate you having me on here. This is great, dude. I was just saying, like, you know I can talk about this stuff all day, but spending talking with you is even better, because I've had the opportunity to get to know you digitally, at least, as a community member, as my just like myself, and then working more together nowadays is just been a lot of fun. So thanks for kickstarting this thing.
Absolutely, this has been a blast. Thanks so much for doing it, and hopefully the first of many.
No doubt, I'm always around, man.
All right, cheers.
Ciao.